Hi everyone, welcome to this episode of the Immigrant Doctor podcast. I'm your host, Dr. AVISHKAR, the Immigrant Doctor. Let's talk about what makes a perfect deal. This is very important, and I came across this concept because I'm partnering up with Oren Klaff. He's been in private equity for a long time, and so we're partnering on a private equity deal that we're in together. So he kind of explained this concept, and I really wanted to bring this to you guys so that you can understand what really composes a good deal, right? So the first and foremost thing that's the most important is it has to be a good quality product, not just a good quality, actually a great product that you're investing in, right? You have to see that whether is it going to stand the test of time, is it going to have that longevity in the market that you're looking for, right? Now, let me give you an example. Say you were investing in Apple iPhone. Right? Now, Apple iPhone is a great product to invest in. It has stood the test of time. They have, of course, been upgrading it time and again, and it has that brand following because of the quality of the product that it is, right? It was a game changer when it came out. It was an amazing product. It was a no-brainer for people to invest in that. So it all starts with actually having a great product in mind or a great product that you're going to be investing in. Now, the second component is the right team, right? You may have thought of a great product and you may have a great hypothesis around how you're going to do that, but you need to have the right team to deliver that project, right? I'll give you an example. So in the private equity deal that I'm in with Oren Klaff, actually they're setting up a bio-quartz factory. So quartz, the slabs that are put on countertops, they're setting up that factory in Dallas, right? Now, the project itself makes sense because the product is great. But then we also have to make sure that the team is right. And guess what? Their team has been working in not just the stone industry, but specifically in the quartz industry for a long time, right? That makes for a great team. I'll give you another example. We have a development project in Dallas. That's a multifamily development project in uptown Dallas, right? So we needed to find the right team for it. I don't know if you guys know about this or not. It's 1899 McKinney. We partnered with AVISHKAR Property Company to actually bring this project to our investors, because we needed to have the right team delivering the project. They have immense experience. They have an established track record in doing this. Now, say for example, let's just take an analogy, for example, right? Somebody who's been a physician or who's gone to med school, right, but hasn't gone through residency yet, you would not be comfortable going there and showing yourself to them and, kind of letting them make your medical decisions. You would want somebody who's had some experience, who's had some runway, who's actually been a physician, who's been in the trenches and learned the stuff that they need to learn to deliver good medical care to you, right? And so all of this comes with experience. Now, the other thing I want to highlight is I said the right team and not the right person, because investing is all about teamwork, right? It's a team sport. So you have to look at the entire team that that's operating the business. So for example, like I mentioned, AVISHKAR Property Company, they have a great team. The deal with Oren Klaff, great team again. I want to talk about my current team on the multifamily side as well, right? On the multifamily side, I have a team. I have been in real estate for about 4 or 5 years now. I have owned some of my own assets that I have operated. I've had property management take care of it. And, I've had that experience. I've been in the trenches doing that. But guess what? That experience in and of itself may not be enough, because now we're looking at larger assets. So guess what I did? I partnered with people who are way more experienced. So one of my partners actually has an equity position of about $1,200 to $1,500, right? She does due diligence on a day-to-day basis. She works for a real estate firm, and this is all they do. Now, her immense experience brings that experience with the team that we have, right? That makes a great team. That's the right team for you that can work cohesively, and that brings in all the experience needed to deliver that great product to the market so that, the plan that they've made can actually be executed properly, right? So let's talk about the third component, that is the market fit. See, it's very important that even if you have a great product and the right team, it has to have that demand in the market. If there is no demand for this product in the market, it is not going to work. The product itself might be great, but it's going to be a flop show. So I'll give you an example around this. For example, say you decide to build a luxury apartment complex, but the location that you decide is sort of a rundown neighborhood or a neighborhood in transition, and you want to build it there. The problem is that the tenants that you're potentially going to get in that neighborhood are not going to be able to afford the rents that you're expecting from a luxury apartment complex, right? And people who can afford those rents would not want to live in those neighborhoods where the rest of the neighborhood is run down. So that makes it a wrong market fit. Similarly, you have to understand that it has to be the right market fit. Now, again, I'll give you another example of a good market fit. Some of the deals that I'm in, right? For example, the Dallas property, the Dallas development project that we're in, it's a luxury apartment complex development on 8099 McKinney that's in uptown Dallas. It's literally 1 block away from where Goldman Sachs is building their major hub, right? And so it makes it a great market fit, not just because of the Goldman Sachs, that's just one of the things, right? But if you look at the area around it, if you look at the median income around it, if you look at the people that live around that area, how they rent out and whatever they do, all the other activities available to them around that, a luxury apartment complex in that area makes total sense. So that makes it a great product, a great market fit, right? So I want to talk about point number 4 now, and that is having the right story. So what I mean by that is what makes this deal the right fit right now in the market that we're in, right? You may have a great product, great team, but if you do not have the why, what kind of a problem, what's the choke point that this product is solving, then it's not a great product. It should have a great story. I'll give you an example again, one of my deals, the Dallas deal that I'm in, the development deal, right? This is the right time to get into that because Dallas is facing a lot of housing issues. There's been a huge influx of population into Dallas, which is causing sort of a crisis in the local market over there where there isn't enough housing there, right? And so that makes it a good market fit. Because now we're building something in a market that has that choke point of not having enough supply of housing, right? And so that is how you analyze the story. So now we come to the 5th component, that is capital. Now, a product might be amazing. The team might be the right team for that product. It might be a perfect fit for the market, and it might be solving a unique problem that exists in the market and has a right story, but it also needs capital. Just like any business on planet Earth, this business needs capital as well. This business needs money behind it to run. That's where the investors come in. That's where you come in to actually help accelerate and help deploy it. Not only that, I think the other thing that comes in capital is also what kind of debt do they have on the project, right? What kind of loans do they have? And if we take an example of real estate, for example, sometimes the projects can be over-levered and sometimes they might just be under-levered. And what I mean by that is, say somebody takes a loan out on a project. They might take out a loan that's like 90% of the value is just loan, and then they're just getting 10% of the capital as investors. That becomes very risky because it's a lot of loan. And if you look at how the capital sits in the capital stack, as we call it, the loan has to be paid off first, right? So that makes it a little more risky. But that being said, loan on a property itself is not a bad thing. There has to be a right mix where it might add a little bit of risk, but also it actually amplifies the returns for the investors, right? So sometimes people might feel like, well, I'm not going to take any loan on a property, right? The problem with that is that might potentially decrease the returns for the investors because, hey, there's no loan there. And typically the cost of capital, as we call it, when we take a loan is lower when we're taking actually investor capital and, projecting some returns for them. And so understanding that also is important to kind of look at the entire picture and understand if it's going to be a good deal or not. Well, I think that's been a great lesson for now. I hope you guys enjoyed it. I hope you find it valuable. When you're looking at a deal, make sure it's a great product, make sure it's the right team, make sure it's the right market fit and it has the right story, and then get ready to deploy capital into it. And hopefully, if the deal performs well, and the reason I'm saying hopefully is because there are no guarantees in the investment world, if the deal performs well, you would reap the benefits of it. If you're interested in learning about our deals, what we're working on, I constantly have access to amazing deals. Please reach out to me, email me, and we can talk more.